And I'm muted. Okay, there we go. Welcome back. Okay. My bad. I'm here. I'm here. Meg 7, which is what we were talking about. Meta up 2.5%. Okay. This company was at $600 not too long ago. It's now up 10% from those bottoms. So 660 now on Meta. Microsoft, we were talking about this yesterday, 3.8%. Welcome to the Market Monitor. Geez, now I got to redo everything I just already said. How do I cut that out of the live stream for the next person that's trying to watch this and just sees that I'm muted for the first couple minutes? You know, the companies that aren't working right now, Google, not so much, Tesla, Apple. You know, I'm very surprised by Tesla not being green today. You know, this is where you sort of really get a sense for the market is very much forward looking, because we've seen some of the biggest breakthroughs in Tesla and FSD most recently with things like the ability to have the robotaxi still going, 3 mile, 4 mile drives for $4, and no one's in the car with you. You are fully enjoying a robotaxi with absolutely no driver in Austin, Texas. SoFi, yeah. Here's the thing. Although SoFi is depressed, I'm still very, very happy with this position that we're in for SoFi. I know people are getting worried about the stock price. I had a comment in my last video where I said, what I'm expecting for Q4 and why I'm so excited. And they said, do not buy it here. We're at all-time highs. It's like, we are not at all-time high. Okay, first off, all-time highs is 32.78, right? 32.73. 32.73 is all-time highs. Just to get back to 32.73 at 24.86, 24.86, we're looking at a 26.5% increase, which is a great gain. Going back to those levels. What I'm expected to see is very high levels of growth this quarter. The only thing that I'm worried about is 2026 guidance not coming in line as large as I'd want it to be. Sorry, I know I said 24. I wrote 25.86. Regardless, the math still checks out. You guys can do it yourself. Okay, I wrote 25.86. I might have said 24. I'm staring at the math. But SoFi's red. And this comes in line with the chance of rate cuts just into June, because we're going to have a new Fed chair at 60% chance of easing, according to FedWatch. Okay. Then we go ahead and take a look at Kalshi, who's going to be the next Fed chair, right? We have people like Rick Rieder, who actually might take over as the current chance. This keeps raising every time I look at it. It's actually crazy. Rick Rieder now is at a 36% chance. Even Kevin Warsh, like all these people have are very, very dovish stances of the markets. But just to give you some inclination, where was the Rick Rieder thing? I was reading about Rick Rieder, and he was the CIO for BlackRock for their fixed or global fixed income section of their business, managing like $2.4 trillion in assets. And he was the head of the firm's investment council. He's very dovish. And I'll quote you guys what he said back in September. Further rate cuts by the Fed are not just warranted, they're essential. They are essential. He's a dovish boy. Okay. That is what's raising, potential reasoning that Trump might consider him. We'll have to see. And regardless if you are that's so funny, buy the dip on Kevin. Markets are crazy. I'm guilty of being impatient with SoFi. It really is funny. I was just listening to a podcast with Jeremy Grantham. Now, if you guys don't know Jeremy Grantham, and what's funny is a lot of the podcast from the compound was talking about how he's not a permable. I've known about Jeremy Grantham for a long time. In my investing lifetime, this man has been a perma bear, very perma bear. But, like during 2022, he was shouting from the rooftops about how right he was, and then still said we have a lot lower to go, and then we didn't. Yeah. Regardless, part of the podcast that I really liked about with Jeremy Grantham was talking about how timelines for people have just gotten so unbelievably short. Like whenever people look at my portfolio and they go, oh, your portfolio is not working. You have Hood and SoFi and Nvidia and Meta and these sort of names, which by the way, I'm buying Meta on the dip. I didn't catch I'm buying the falling knife. I didn't own it at the top. And now going to be buying Microsoft here as well. But those names historically have worked. And whenever you look at the last 3 months or something like this, it can look like, we're a little bit more stagnant. Buying Google whenever it was extremely depressed. Google's like the only one out of the application layer Mag 7s, meaning, sort of the Metas, the Amazons, the Microsofts, the Googles, right? Or Apple as well. Google's the one that's actually worked over the last year, but we weren't buying it, as it was depressing. We bought it at a pretty decent dip, around 140. Did I get $90? No, but it was a decent price. So timelines, ladies and gentlemen, timelines. SoFi, how can you be impatient with a name like SoFi? We've gone from $7 to 25. It's been phenomenal. But you're anchored to the price of 32 because we touched it for just a little bit. And it's like that moment where at least something that I constantly try to reiterate. It's like, okay, well, if the stock got to 32.73 and just held that price through this 3-month waiting time, would you have preferred that? Or would you have preferred it to dip below? Or like for example, instead of it being $7 and then pop up to 25, would you have preferred it just take a slight and incremental growth each and every day? I think a lot of the volatility actually allows us to buy on dips, and that actually allows us to have better cost bases because we're not forced to buy every single day if we don't want to. So we get to buy whenever, we think that it's more depressed than it should be. And I believe that that's where SoFi is today. Yeah. If you were buying SoFi under 10, you can't complain too much. Yeah. Yeah. Okay. My average has risen above 10 since I've just been buying SoFi above these prices, but it's because someone said oh, SoFi is getting beaten or is at all-time highs and everything. I'm like, the only thing that's at all-time highs for SoFi right now is the members, the net income, the revenue, the growth rates. Companies are not. This is something man, I have conversations with my dad, and I just have to frickin' shake it into him. And I'm putting my dad on blast here, but he will say stuff like, oh, stocks go up and down. I'm like, no, they do not. Sure, in very, very short time periods, yes, they can go up and down. But overall, the earnings that SoFi is earning today has never been like what they were before. Okay. And stocks, honestly, trade up and down on a multiple of their earnings. But if earnings continue to climb up, then you're essentially on a trampoline going up an escalator, right? If you're thinking in these small 3-month time periods, then yes, you're seeing this. But you need to zoom out. When in doubt, zoom out. And I'm listening to a lot of commentary online, and it's like a lot of people are pushing people into these catch-up trades, these forcing people into these, smaller and smaller market. I've never seen so much activity in companies under $100 million in my life. Okay. I've been doing this since 2015. I've never felt like people are trading the most risky companies I've ever seen. Bored? Maybe. If you mean my talk, you're free to leave. But where is the risk reward balance? When did, like, I saw Steven yesterday talk about how 15 to 25% returns needs to be remembered as great returns. If you're beating the S&P 500, which so few retail investors do, okay? If you're constantly beating the S&P 500, you're in a class of your own. Like, you're in great territory. The greatest investors of all time, even like the Warren Buffetts of the world over his very long-term career, was averaging, I think, like 19%, which is insane. That puts you in Warren Buffett territory. But you look at what people are doing online and they'll make one great trade, you know, that does really well. Try doing that every single year as your wealth compounds. It's harder than ever. Yeah. Robert said, Robert's got to be one of the funniest people in chat. Only 25% of fund managers beat the S&P 500, I think. This guy will throw stats into the chat. Just, hey, Tanner, if I'm wrong, ban me. I'm Team Robert on this one, but I don't know. But for real, you should just Google it. We have been spoiled for years. But if there is a bad time, the small companies where people are taking a lot of pot shots, not only like they could be like the people forget about 2022 like crazy. Like even fintech, like where you're in I know that's not the most exciting area, but like whenever you think about just, hey, are more people going to be using branches or are they going to be going online? Like you could just so easily see that the total addressable market is leaning towards fintech. Okay. So you have almost like a great wealth transfer, a tailwind, a secular tailwind towards digital banking. Look at the VC funding for fintechs. I could probably find this. Let me see if Gemini can pull this up really quick. We'll switch the model to fast. I need answers now. And what you ended up seeing is VC funding for new fintechs dried up. And when I mean dried up, I mean like 90% declines. Like money just went away from an industry that was profitable, growing, and had tailwinds. What do you think is going to happen to a lot of new technologies? Like very exciting technologies that just, you know, there's not a lot of profitability right now. We'd rather have our money in safer investments like Coca-Cola, Costco, and honestly, what is the blue chip stocks of today is Meta, Amazon, Microsoft, and all of these names. So while the market's getting frothy and going towards people who are chasing those extreme gains, I'll be okay having a little less viewers, but I'll be so right on the other end because I know that I'm buying quality names rather than chasing hopes. You know, I see so many people put in names into the chat and they're like, hey, I'm buying this name. And I'm like, you don't even know what that company does. I'll fight Jack Bogle right now. Okay. Netflix, yeah, I mean, but that's not a not quality name. Like I believe you can make like if you tell me you're invested in Netflix, I've got full belief in you. It's just I don't personally see that one, but that's just a personal preference. I don't, you know, yeah. Nebius is in what bucket for you? Be quiet, okay? You're trying to get me. I'm not saying all my company, and you know what? You picked the wrong one. You should have said BM&R. You would have had me, you know, caught red-handed, hands behind my back. You've cuffed me. I'm wrong. Okay, throw me to the ground. Nebius, that's a quality name. I'm not perfect. I'm doing my best. Tanner, why do you hate the battery makers so much? I've never even remotely looked at those companies once. But the only battery makers that I've been trashing on lately is Tesla. No, I'm kidding. BMNR has Mr. Beast. What does Nebius have? You're actually right. I don't know how, like, in terms of celebrity endorsements, I think Nebius has like 0. You're kind of right. I'm going to sell. I guess Jensen is a celebrity endorsement now. I saw Jensen in real life. The dude has unbelievable, like, he is a celebrity. He walks like Cristiano Ronaldo. He has it. New to the channel, what are your top 3 holdings? NVIDIA, Shopify, SoFi. And then Robinhood and Nubank. Nubank, by the way, I was talking about this earlier. But we have to highlight Nubank. These are the types of companies that I am head over heels for right now. Growth companies. I still think underrealized, way cheap. Like their multiple has not really seen a big uptick because they're a non-American company, but they're trying to enter America here. They're going for their bank charter in the United States, and they just keep proving that they can just keep growing. Keep growing. They actually just announced that they are now the largest private institution for customer count in all of Brazil. So no longer comparing themselves like, hey, we're the biggest fintech. Hey, we're the biggest fintech globally out of Asia. No, we're just the biggest bank. We have the most customers. We actually just announced that we've gained 2 million more customers since our last announcement. Now we serve over 61% of the adult population in Brazil. And to David Velez, the CEO, he actually doesn't believe that the adult population is their target audience. He believes anyone over 7 years old, anyone over a need to have a debit card and potentially spend to, go buy a lunch or something like this is their target audience. Yeah, I'd have to check what Shopify even makes of my portfolio right now, because it's definitely it's taken a big hit. But I can go check that right now. Okay. Looks like Amazon is waking up. They also got a big upgrade today. Citigroup gave them a huge endorsement. So, sorry, I'm all over the place. I talk about Nubank. I talk it's just my general thoughts every day. Let's go ahead and where's that Citi announcement? Citi. Where's Citi? What? Oh, there we go. I posted it in the wrong section. Okay, let's go ahead and read this really quick. Let me bring up Amazon stock so you can see it crash as I talk about it. Up 2.1%. We expect, this is Citigroup on their earnings results. We expect Amazon's Q4 2025 results to come in better than consensus expectations, both across revenue and operating income. Specifically, we project that AWS revenue growth will accelerate to 22.5% year over year. Okay. That just recently broke 20% and was doing 19% the quarter before. We could show that off there in 1 second. But 22.5% on greater AI partnerships and infrastructure build-out. On retail, given what appears to have been a strong holiday shopping spree based on third-party data and Citigroup's own credit card data, which is huge. They're one of the largest credit card providers in the entire world. We believe Amazon's continuing to gain share of wallet. Lastly, greater advertising demand and efficiencies should result in outperformance and above the high end of guidance. What? Pretty exciting. Another part that they ended up saying that I thought was very cool was we wait to see the insights on 2026 CapEx plans, which is the only thing I'm thinking about for purchasing before or after earnings, because it's not like my cash is building, but I do have cash right now. And just every time I get paid, I just haven't been purchasing as much stock as I usually have in this last sort of month. More because I've just been more busy than ever. But anyway. But I don't know if I should go out and buy all these Mag 7 names, which is the only real names that I'm actually looking at, that and Nebius. But anything that has to do with cloud spend, I'm interested in right now. But 2026 capital expenditure plans is going to be not a big shock, but it could be the biggest shock of these companies' quarters. And then they also said that their approach and framework on agentic commerce is another thing that they're excited about for Amazon, which I've obviously given a look at for PayPal and Shopify and Visa and MasterCard and all of these companies, which are going to benefit greatly. But I've never really actually given it that much thought for Amazon. And of course, it's going to be a big play. So really excited about that. Amazon remains our top pick across the internet sector, given accelerating AWS demand, consumer wallet share gains, and margin expansion. We reiterate our buy position at $320 price targets. Yeah. That's the only thing that can tank those stocks' free cash flow drain into CapEx and guidance. I'm sure the results will be good. The only thing is with I don't believe in this free cash flow drain into CapEx thesis. Like, the narrative to me just doesn't make sense. To me, what it is it's a purchase of inventory, right? It's property and equipment, but that equipment is the inventory. So if American Eagle, Lululemon, Adidas, I can't think of many clothing brands right now, but you can tell I focus on tech companies, right? But if any of the retailers say, hey, we're having a huge surge in purchasing bulk clothing, people would say, wow, you know what? We're actually getting signs that there's a lot of demand for these customer trends. They're buying these, Lulu tights or some form of American Eagle jeans or whatever, Sydney Sweeney's back, whatever. That would be potentially bullish sentiment. They're spending because they know that the demand there is very high. The capital expenditure spend is a bet, not based on speculation. Every single one of these CEOs, Andy Jassy, Sundar, and which one am I missing? Satya, have all said that the only way that they are going to spend for more infrastructure build out for data centers is if they know that the customers are there. So if you see a big, 2026 CapEx ramp, what it's essentially highlighting to you is that they have the cloud customers. They're going to get it back eightfold. So come on now. And then on top of that, 40% of my portfolio, probably higher since Shopify has been taking a dump. Let me check that as well. But all the CapEx spend just goes back into my other plays. Yeah, Shopify is now 16% of my portfolio. NVIDIA, 43.8%. Let's go. The only problem that I'm having with this, if the rest of my portfolio does not act right, if they don't get their stuff together and let NVIDIA, my upside on NVIDIA is only going to be to 50%. Then I'm going to constantly trim. So in terms of portfolio management, I'm not going to let NVIDIA get above 50%. I've thought about taking that profit and buying into AMD, buying into Broadcom, buying into another form of an infrastructure play, a semi name. I've not made that decision yet, but I'll have to make that decision in, 6% increase in NVIDIA. Well, actually 12%, but yeah. Nebius 47% portfolio here. I mean, you're goated. You got balls of steel. Mine, I hope to get Nebius up to 5%. After CES makes sense to keep it all for NVIDIA. Yes, sir. I thought you were saying after the first way that I read it, just by glancing your comment, is after CES, why are you keeping your NVIDIA? And I was going to say because of CES. But yeah. 40% SoFi was covered calls on all stocks. I mean, what happens if, Q4 looks really good and then Q1 looks really good and then the $3 billion that they've just raised goes into some, pretty good growth initiatives? You might have to roll. You might have to roll again, and then you might get buried. So I'm not looking to rush out, and I don't like to buy stock and write covered calls in the same, like, if it's cheap enough for me to buy, it's not expensive enough for me to write covered calls. And by the way, guys, I am I'm not going to say the word that I want to say, but it starts with a P. It's 5 letters, ends with a Y. I don't like to take a lot of risk with my covered calls. I'm a coward. Yeah. I'm a puss in boots. Coward. Yeah, coward. Should have thought of coward. Okay. And S&P 500 inclusion. Imagine holding covered calls after S&P 500 inclusion. Or sorry, before covered calls inclusion in Q4. Yikes. I thought this is a family friendly stream. It is. The whole family can learn about stocks, and from somebody who's trying to be a growth investor. And hopefully, doing it right if I can keep it up. But is this AI? This is insane. Milei just does it different, eh? This man just what's up with everyone in Latin America just rocking Nike outfits in any occasion? Nike techs, got the Nike shoes on. It's crazy. Okay. Meta is on fire. Let's go ahead and take a look at Meta. It's not Meta that's on fire. It's Microsoft that's on fire. I think you meant to say Microsoft, up 4.3%. Meta's up 2.8. It's still looking great, but come on now. You can't hold these companies down for so long. Look at this. Was that Wednesday whenever I was talking with Stephen Fiorillo about Microsoft? It was at 439. Tanner, what's your take on eToro? What I'm going to end up doing, I knew that video yesterday that I ended up posting would not be very popular, because I don't think people want confirmation bias, and no one's talking about eToro, so no one cared about the video. But I'm just going to start doing more public due diligence. So I haven't even made a decision on eToro. I mean, I might, but yeah, I don't know. Anyway, to answer your question, which I didn't, watch the video. Yeah, watch it twice. It is not growing as fast as any of the other names. IBKR is really, really exciting. Huge news for Robinhood Gold members. You'll now be able to earn high interest on cash sitting in options collateral. Whoa. Effective on or after March 9th, 2026, the high yield cash program will also pay interest on eligible options cash collateral. The same interest rate will be paid on cash sweep programs. Dude. And honestly, this is such a smart idea. You know how many people are going to end up rotating their cash to bring this more to, like big options traders are going to rotate their cash to Robinhood, or potentially even away from Tasty Trade to Robinhood. That's where they make all their money. That is incredible. Love it. Oh, you guys have it on Fidelity? Okay, well, it's coming to Robinhood. Okay. Well, that's insanely awesome. Okay, let's see what else. Tesla, the new robotaxi news is still getting people pretty excited. However, I saw that they were changing some of their other rulings around full self-driving. For example, Sawyer ended up posting that they are discontinuing autopilot in the United States and Canada. All new car purchases will now come standard with traffic-aware cruise control. And instead, they're also going to be essentially canceling the one-time purchase of full self-driving, and that the monthly subscriptions are going to be the new way that they're monetizing full self-driving. So going a little bit backwards for the the autopilot, but full self-driving will be the new main focus. If I'm not mistaken, Elon also said that the price for FSD is also going to go up. So I don't know if that means that the monthly fee of $100 is going to climb or not. Let's see what he had said. Oh man, this guy tweets so much. It's incredible. Anyway, whatever. But yeah, he said that the prices are going up. What is your take on Iren? My take on Iren is that I prefer my money in Nebulous. I don't have a great, thought out take on Iren. Okay. Let's see. Zeta looking really good. Any thoughts on Duolingo? No real thoughts on Duolingo. I think that there's a price to be paid, for this business. If you go on the App Store, maybe not in the United States, but in places like France or Germany or some of these places like European countries, Duolingo still ranks extremely high. And you have to remember that, if I'm not mistaken, the number one language that is trying to be learned on Duolingo is English. I don't think that the tools for translation are going to be used for full, like, people's jobs, right? So whenever you're talking about like, oh, I need to go to Japan, I'm going there for 4 days. Am I going to go on Duolingo to learn the basics of Japanese, or am I just going to bring my phone and it's going to translate to the store owner to let me know that I want to buy a drink, right? That use case obviously will be used for translations, but Google Translate's been around for a long time. Like, you can do that now. But to get a high-paying American job or something like this, and you want to work for an American company, you're not going to be able to use your iPhone headphones or ChatGPT or anything along these lines to translate your full-time work. So I still think that there is a need for language apps, and it's not even the proficiency of how well it is for them to help you learn a language. It's more along the lines of how sticky it is, how much they have you coming back. That is what I'm more interested in. Duolingo is dead, yeah, but their users and growth is not saying anything along those lines. So I think that you're more worried about what the stock is doing, and I actually think a lot of the alpha is being a little bit of a contrarian in markets. The market is not just running with the crowd. The money is in saying that the crowd is running blind with no leader, and so I'm going to go the other direction. Duolingo leering system. Yeah, I'm. Okay. Gemini has that help me learn. You can try to use it to learn a language. That's not what makes Duolingo useful. If people had the want to learn a language, then they would use Rosetta Stone or any of the other tools that have existed for a long, long time. The interesting part about Duolingo is that they have you feeling like you need to come back. They have user retention. They have streaks and daily active things that make people want to come back. If it was so easy to learn a language, the existing programs before Duolingo would have already worked. The interesting part is the gamification. Exactly. It's the gamification. It's the sticky part. It's the getting people's attention and keeping it. That is not going to happen on Gemini because they don't care if you learn a language. Okay. Tanner, when will you and the gang put out a SoFi predictions video about earnings? Already did. You're late. I don't know when they're going to put out videos about, earnings. I've got no clue. I want to watch earnings with the boys, but I also want to be able to get the earnings, like the stock price reaction. It's been the biggest complaint that I hear every single time. And the only way that I know how to do that is to use Streamlabs, which does not allow for multiple people to stream at once. So I'm getting a little bit worried about SoFi earnings. Yeah. Duolingo wants you to learn the language of the bird. Of course, I'll stream SoFi earnings. I'll stream almost every earnings during this season. Like if I'm to go through here, I'd even stream Palantir earnings. It's just a matter of I won't be in. I'll be in New York during it, but yeah. I'll most likely stream names like Seagate, ASML. I don't know which one to pick out of these. I'll probably end up listening to Meta, but we'll watch all of these. But Meta will probably be the one that I end up listening to. Apple, Western Digital, MasterCard, SoFi, obviously. Next week, we have PayPal, AMD, Google, Amazon. There'll be a lot to listen to. We'll be busy. And we'll cover all these names in here. I'll be listening to AMD, but we'll be following the earnings for Chipotle and Red Cat and Enphase and Take-Two and EA and Amgen and all of them. not many companies have earnings on Fridays. It's actually funny that SoFi does, but we had Booz Allen Hamilton and Webster Financial, companies like that today, but they're already done. They were all at open. All right. Hood just bagged all the Fidelity Trade customers, including myself. Well, enjoy. No, I'll be watching SMCI. It's just I'm not going to be listening to the SMCI call. I'll definitely listen to AMD over SMCI. Okay. The most fun 2 weeks that you'll have in a quarter. Dude, earnings goes on for a long time. Like even past, like in deep into February. Then we have AppLovin, TTD, Coinbase, Robinhood. That's all next week. Then the week after that, we have Shift4 and Grab and Carvana and Mercado Libre and Block and Wix and Alibaba and eToro. The week after that, we have Lemonade and Axon and Nvidia and Rocket Labs and Dell. Those are all on different days. Okay. Then the week after that, we have Marvell and Broadcom and CoreWeave and Dave and C Limited and VG. I mean, it's gonna be stacked. It's not even a 2-week thing. It's like 6 weeks. 6 weeks, 4 times a year, we have an earnings call almost every single day. And boy, oh boy, do I love it. Okay. Are you Cayenne Pepper in Discord? That's pretty cool. I see you in Discord. Who cares about Dell? SMCI has a much bigger AI business. Okay. Yeah. When's Nebius earnings? Let's have a look. They're doing earnings estimated. So they haven't officially announced their earnings, but it's estimated to be on February 19th. Tanner ignores me on Discord. You have to at me, like not add me, like the at. If you at my name, then it pings me, but it doesn't ping me for every message. So some people just say Tanner, and I never receive the message. Yeah. Russell 2000's down almost 2% today. I mean, I think it's scary that a lot of people are, I think that there will be a lot of money to be made in some of these, smaller cap names. But I think I've just seen too large of a push recently for people just taking on a lot of risk. By the way, Intel down 17.6%. It's still finding lower lows today. That is so crazy to me. The Intel hate is real. And trust me, I'm not like rushing into this name or anything along those lines. It's just 17.6%. Air Test Systems down 8%. Capital One down 7% on their acquisition and earnings of Brex HQ. Amcor, D-Wave, Hyperscalers, Open Door, DraftKings, Wealthfront, Soundhound, Xpeng, SMR, Oklo. Wow, is balance restoring? No. We have those names down, and Microsoft's up 4%. I think, I hear birds chirping and trees growing and bees are spreading their pollen. And do you guys feel that? The oxygen is clearing. No, I'm kidding. eToro and X partnership equals possible acquisition. That's a long, that partnership was announced a long time ago. Triple V almost got cooked on Intel. He had like $500,000, but his order did not fill. Yeah, I mean, I know Triple V, and at 500K, he wouldn't have changed the way he slept. Okay. I bought a bunch of DraftKings pump incoming. Here's the funny thing. DraftKings doesn't know that you hold it. So you must be the guy that knows how to buy the bottoms. You should, no, you know what? Never mind. I'm not going to talk about Triple V, guys. You can ask Triple V about his personal life. I'm not doxing him. Okay. But you know what? I do think that prediction markets, as long as they come into favor and will not get regulated away, which I do not think that they will. I think that they're going to become so unbelievably popular that you'd almost be hurting customers if you did take it away. But that it will honestly be owned by a lot of the brokerage companies that exist today. And I don't think that it'll be owned by gambling companies. I think like, the Weebles and Robinhoods and IBKRs and eToros of the world, the companies that do this for a living will just simply, take over the prediction markets. And they're going to be a lot bigger than, they'll be a lot bigger. What do you call it? Than equity markets. Geez, I got to put my thoughts together. I'm not saying DraftKings is done for. I'm just saying like, yeah, I don't know. Isn't it interesting that Robinhood is still not adding accounts even with prediction markets spreading so much? The people that want gambling on that stuff were already on the platform. Well, I think they are adding customers. They're adding a lot of customers. It's just not as a percent change. So like for eToro to add 1 million customers, that would add 25% new accounts. For Robinhood to add 1 million customers, it's nothing. But it's 1 million new customers, all the same. You know what? Another thing that I think is important is that recently Robinhood has written off a lot of customers for having no activity. So part of the escheatment rule is that they're not counting customers that don't have activity on the platform, even with small dollar balances. So a lot of their customers have actually churned off the platform, but it's not, in any sake of Robinhoods. It actually makes their average revenue per user and assets under custody look much better whenever they do that. Hood is now IBKR's biggest threat, in my opinion. Well, yeah, I do think that. I don't know if it means that they are going to take IBKR out of business. You know what I think about the brokerage space is that they're going to be so close in product and features and everything that both will just live in happy coexistence. A lot of them will live in happy coexistence, just whether or not you're buying the ones that are moving really fast. The worry is that you go ahead and you buy an AMD or you buy an Intel, and what you miss out on is an NVIDIA. So like they're all going to do fine. You still would have made money buying Intel, maybe not after today, but you would have missed out on 27,000% gains on um, Nvidia instead of making your 40% profit on Intel over the last 20 years. Hood's only in the US of A. Yeah, for the most part, you can say that. I think they have a couple 100,000, 200,000 customers outside of the USA. Okay, let's go ahead and continue on with some exciting news stories here. China is clearing the way to allow for NVIDIA H200s to start selling for customers like Alibaba, Tencent, and ByteDance. There is some concerns that they might need to also be purchasing domestic chips alongside AMD chips, or sorry, NVIDIA chips. So they're not going to be just be buying NVIDIA. But still, this is revenue, guys, that people were not counting as, in the guidance for NVIDIA. So we're back above 180. We have heard this before. Honestly, it looks like all the green lights are on now. It really does. China says yes. America says yes. NVIDIA says yes. The only thing is now they have to put in specific order sizes, and then those order sizes have to be approved by the Chinese government. Trump's about to turn it off. Maybe, but I don't know. That's why I think Jensen is being so apolitical and doing all the right things. Is like him and Trump are like buddy now. And I don't know how he actually feels about Trump. Maybe he's a fan, maybe he's not. But he sure is saying the right things to get NVIDIA, the company, to get more sales. Did you see Volvo's using Google Gemini in their car? Is that new news? If that is, I think that's going to just continue to happen. Imagine what that looks like too. Like the Apple CarPlay and all these different devices in your car are now artificially driven. You know what? I put out a poll on X and I was like, okay, well, if ChatGPT ended up coming out with a phone, which is not what they said their hardware devices that they're designing is going to be. They said it was going to be a device that goes alongside your laptop and phone. But regardless, if it is a phone, would you guys switch to use a ChatGPT-like device? Do you think that there's any product that they could put out that might sway you to not be part of the Apple or Android ecosystem? I had practically a resounding no. Okay, everyone said no. There's one part that I'd like to highlight. A lot of people use ChatGPT and don't like Sam Altman at all, and it's because the product is so unbelievably good. Like let's not discount the fact that this team has created a product that's now being used by 900 million weekly actives. Fastest growing company of all time. Nothing even comes close, and everyone still says no. Another thing, in tech companies, you'll be surprised by this, but this is why whenever we're talking about full self-driving, you driving an electric vehicle, no one's ever going to get me away from my gas car and everything like this. Customers, honestly, especially in tech, do not even get pulled on what they want in those products. You probably have not received a lot of pulls on what you want from an Apple iPhone because customers don't know what they want and because they don't know what's even possible. And that's really true. Tech history will show you that they do not pull customers because they don't know what's possible. I'd like to imagine a time whenever we could buy a cell phone or something like this that has the ability to be more of a blank slate. Okay. Not apps, but that you it will immediately go to the part of the app or service that you just immediately know that you want, right? Redesigning the outlook and the design of, I don't know how many times you guys have gone to like the settings part of a phone and been like, okay, wait, how do I get that, like, this contrast, this brightness? I don't know where this is. Is this an accessibility feature? Is this part of the, this part? Is this an app specific feature? And you kind of get lost in the settings sometimes. What if AI just completely just says, hey, what do you want to change? You don't have to go find the feature. Don't worry about all that. Or just tell us what you want. I want to get from my house to that house. Okay, well, we'll send you an Uber. So I don't know what's going to happen, but artificial intelligence is going to rethink, redesign the way that we're doing banking, the way that we have hardware and devices, the way that we talk to computers, and like the way that those computers interact with each other. It's insane. I think that the compounding effects that are going to happen over the next 5 to 10 years on technological advancements. And then people don't want to bet positively on NVIDIA, Meta, Microsoft. It all goes back. I don't know, man. AI is so much more than a chatbot that treats it like a Google service. People just look at AI like it's a smarter Google. That's not what it's going to be. Okay. Tanner, Fundrise is now up 30% since SoFi offered it as a private market investment. I should have bought more. Nice. Robinhood banking is awesome. Tanner, do you have it? I don't have any Robinhood products. I'm a Canadian, filthy Canadian that gets no Robinhood products. Yeah. Interview with eToro CEO? I don't know. I don't have anything confirmed. That's what you're asking. What should fair value for Meta be? Today I would like it at like 850, something like this, Not a good product. What is? Robinhood. I have Robinhood and don't use it. Not a good product. The customer growth would say otherwise. That is actually my biggest concern about eToro is whenever I tell you guys in chat, I'm like, hey, I'm potentially looking at eToro. And then like, it's a resounding, like 80% of people who have tried eToro are like, that app is trash, throw it out. Like, that's not a good sign. You want, like, if you're an engineering focused company, you have to have the best product. Yeah. I have not purchased eToro. Not yet. But it's so cheap. Like, I don't know. How do you balance those? That's why it's so hard. Tanner, if you could ask a question on the SoFi earnings call, what would it be? I don't know. I'd like to see the numbers first. It would probably be loan platform business or maybe the recent capital raises. Something around those two issues would probably come to mind first. I want normal stocks, not stock tokens. You don't care. You don't care. You act like you care. You don't care. All like literally, I was listening to a, well, not even just in this one interview, but in a lot of interviews, a lot of these like fintech CEOs and everything said like if they could go back in time, they would essentially just build their businesses on the blockchain to begin with. I do care. No, you don't. Nope. No, you don't. I don't believe you. I think if you realize that you can buy fractionally, it fills instantly, it's cheaper. Um, people can't see what you have. Like the security and privacy is there. Um, you could even vote on those shares, everything like this. What's the difference? There's no volume. That's not the question. That's like saying EVs won't work because there's not a lot of charging stations. Yeah, until they solve the charging problem. And then you'll get one of the most valued companies in the world. I have eToro. I buy shares. I buy crypto. What more is there to like? All right. Uh, is there any reason why stock prices are always kept low via splitting to encourage more options activity? I think it's just like they want more purchasers, right? Um, although people do have the ability to buy fractionalized shares, they don't like to. So, Mercado Libre, I have honestly heard from a lot of people that they don't want to buy this company just because it's expensive. But they look here, they look at the $2,100 and they don't look at the fact that, this is a really fast growing company that, like, wow, only has moved 15% this year. That's crazy. You go max over time, and the company has been one of the greatest compounders of wealth ever in history. But $107 billion company, over $2,000 a share, and people think that that's what makes it expensive. But it's not. Still can't purchase fractional through things like Fidelity and Schwab. That's crazy. That's crazy. You can't buy fractionalized shares through Fidelity. But they also probably think that the lower end customer that doesn't have the, the dollar amounts to buy fractionalized shares, that they maybe don't even want them on their platform anyway. That's literally not true at all. Okay, well, bunch of people instantly said, nope, not true. That's a lie. That's a lie. Okay, well, ban that guy. Get him. Okay. Wasn't Tanner fact checked? I read a comment. I don't know. I'm not fed. That guy got fact checked, not me. Robert's tested. Robert, don't fight me, Robert. Okay. Are we having a little drawback on stocks right now? Also, what's crypto doing? Have we are BM&R shares, BM&R holders happy? Under 3,000 again? Well, okay. Bitcoin under 90 probably. No, above 90. Okay. Triple Q's up 0.4%, better than when we started the stream. Crypto is pooping the bed. I'm a BM&R and ETH holder. It's just something to ignore for months. Yeah, happens, I guess. What are you buying now? Like I said, I'm growing a little bit of cash, but not on purpose. It's just been more busy than anything. But I'm just trying to decide if I want to go and buy a bunch of Mag 7 names, which is really all I'm like, guys, all I'm thinking about right now is the cloud providers. Cloud providers, Nebius, buying those names. I've thought about buying some ServiceNow, eToro. I don't know. Yeah. It's a hard game. And I don't know whether to buy the Mag 7s and these sort of names before or after earnings. Because I do think that they're going to crush earnings, and the expectations are going, or like the revenue and EPS across all of those names is just going to blow away Wall Street. Like, I think we're just going to, that's going to be a big win. But I also think that the 2026 CapEx talk could keep them down if people are worried that free cash flow margins are not going to improve, which I don't think that they will. But how nice is this? We already talked about it, but still, now they're starting to run like promotions on it and stuff. Earn while you wait. You can soon earn 3.25% APY on your cash while holding as options collateral, coming in March. Nice. Robinhood Gold, driving more options revenue, more $5 subscriptions. Gotta love it. Let's go ahead and see what the heck is happening on CNBC. Any interesting conversations right now? Morgan Stanley's Jim LeCamp says that he would caution people about getting out of this market. Got to be careful with asset managers for sure. They do benefit from having people put more money with them, so they would caution you to leave any market. But let's go ahead and have a listen.
Morgan Stanley Wealth Management Senior Vice President, Jim LeCamp. Jim, it's great to see you here. You painted this picture in your emails to us about this rodeo bull. Can you set the scene for our viewers about why you think this is one that's, despite the twists and turns and the ups and downs, it's a bull worth watching?
Yeah, it can be a market that's really hard to stick with because of the rapid fire news and the rapid fire changes in policy and Trump tariffs on, tariffs off, Greenland. These things can be very hard to keep up with, and it can lead people to think, oh, I better get out of this market. And this is a market that's had a big run anyway. But I would caution people about getting out of this market. It would be really rare for a market to experience a big bear with interest rates falling, earnings rising, the Fed in a cutting cycle while stocks are nearing an all-time high, and all the expansion that's going on in the market. So last couple of years, we had the Magnificent Seven. That was the only clean shirt in really a dirty laundry basket. Now we're seeing expansion everywhere. The biotechs are moving, the banks are moving, natural resources are moving, small caps are moving, mid caps are moving. And we have a lot of deregulation kicking in that's really helping these small and mid cap companies. In fact, we're seeing earnings expectations at 17% on mid caps, 19% on small caps for this year. That's a big turnaround from what we've seen out of these areas in the last several years. So we have a lot of good things going on, but there are a lot of fat tails on this rodeo bull. There's a lot of risks out there as well, and investors need to be aware of those too. I think they just need to stay with this market unless these things materialize.
When you're looking at the overall economy and where this goes, how much emphasis are you placing on the Fed and Fed independence as we move forward? And then things like, we're expecting a decision from the Supreme Court on whether the president overrode his authority where tariffs are concerned, but we're not going to get that decision right now. How much will that matter?
It'll matter. I mean, there are things that could really upset the apple cart here. When we talk about Trump's trying to run this economy as hot as he can, he's got a midterm. Typically the markets sell off a little bit during the midterm year, but he's really trying to run this economy as hot as he can and still have the Fed in a position to lower interest rates. That's a very narrow path that he has to walk, and he's got a lot of stimulus coming in. It could be good. I mean, this one big, beautiful, bodacious bill has 100 to 150 billion of stimulus coming in for small businesses. We have deregulation coming in for small businesses. These are all good things for business, but it might get the economy in a spot where it's difficult to cut rates. And we need rate cuts for the banks to continue to rally, for private equity to do well, for real estate to do well, and for small caps to do well. So it's a really narrow path, and we need to watch these things. And look, if the Supreme Court say that the tariffs are problematic and they're unconstitutional, that's just going to be a buying opportunity. I'm not worried as much about that. What I am worried about is our ability to control inflation and maintain this rate cutting cycle that we're in.
I don't think we're going to get a rate cut in January. I think that we're going to overall get rate cuts this year, and potentially Rick Reeder's going to get in. I mean, Kevin Warsh, like, I still think back to that moment. Trump, first of all, said that in his mind, he has narrowed it down to one person, right? So in his head, he has had someone. We can't forget the moment back whenever he said, yeah, we already have someone, thanks, Kevin. He said that whole sort of speech. So that's why I still think it could, either that was Kevin Hassett or Kevin Warsh. I don't know. I still have that thought in my head. Regardless, these people are very dovish, and they are going to cut rates, but that's in May. Yeah, we should know this week, right? That's the whole thing. Beijing tells, we already read this. Chinese regulators are nearing approval for NVIDIA H200 AI chips for top domestic tech firms, including Alibaba, Tencent, and ByteDance, signaling Beijing is moving closer to formally greenlighting imports of last-generation AI accelerators, according to the Bloomberg report. Approval would represent a material bull catalyst for NVIDIA stock and a major win for CEO Jensen Huang and investor Tanner Manson. Wow, they put me in there. That's nice. Who has stated that the Chinese AI chip opportunity alone could generate up to $50 billion. Well, I wouldn't cite that just for what I said, but yeah, I do agree. NVIDIA stock still below 200. Any resumption of H200 shipments to China would potentially reignite upside momentum. This is what I mean. We're still under 200. We're under $190 still, right? Unless we just had a magnificent drop. 188. And not factoring in the $500 billion, which Jensen Huang just recently said is way more. Like, why are people not believing him? For real, tell me why. He said they have full insight. They know exactly what their customers want. They have an ability to deliver. They are not even rehashing 500 billion comment or trying to draw it back. They're not like, well, he kind of meant like, overall demand in the market. There's no pullback at all. As time has progressed, he's only said, actually, it's going to be a lot bigger. Actually, it's going to be a lot bigger. By the way, it's not including Chinese sales. By the way, we're getting Chinese sales now. Like, how are you possibly not believing in this man? We're in freaking January, and then people are like, well, do you think that the stock can get above 200 this year? It's like, do you guys know what can happen in 11 months of investing with rate cuts, increased energy demand, more customers, buying into artificial intelligence, more like model improvements, breakthroughs from Anthropic and ChatGPT. 11 months, guys. Can this get from 188 to 200 while growing at 60+%? Like, and then people are like, no, I want to be safe and invest in Costco that's more expensive than NVIDIA on a multiples perspective. Give your head a shake. I have a deep confirmation bias, and I'm fully aware of it. But yeah. This guy keeps calling me a fanboy. It's like a fanboy for investing in companies that work. Companies that, have been some of the most successful businesses in the entire world, being a fanboy. What do you consider an investor? I'm interested to know. You're not a fan of Nvidia, eh? All right. Well, Costco is as safe as houses, though. Says who? Tanner, you do have a bias. Did you miss the run? What run? Or just think the company will still climb? I've been invested in Nvidia since 2018. My initial cost basis, like just recently, until I, put all my Tesla gains into Nvidia, was under. Not under $5. It was $5 about 80 something cents. There's no run up that I missed. I'm just saying, like, I'm going to continue to make a fortune. That by far the most amount of money I've ever made was on Nvidia. It's been by far my best investment. But I also see that, the show is not over. Find me not an analyst commentator, not a, cubicle sitting, like, what's the analyst that has us at like $100? This dude that, like, whenever we destroyed expectations last quarter, he's like, yeah, it's good, but and he's super bullish on Intel, now down 17%. What's his name? I'm not talking about those losers. I'm talking about the people in the industry. Satya, like, literally you could pick a geography, pick a CEO, pick anyone in the field and tell me that they believe that things are slowing down. Tell me one. Trump thinks AI is going to continue. He's not even in the industry. I am talking about Seaport, yeah. Anytime someone says windmills, I always just think of like the Dutch windmills. To my understanding, that's what a windmill is, like a windmill, not a wind turbine, which is what I think of as a. But anytime that he says windmill, I think of like those old school. Yeah. Yeah, Jay Goldberg. You should listen to his commentary after the last earnings that blew away expectations, made every single commentator on the company have to relook at their expectations and raise guidance for next quarter and the years after. Okay. And then you see this guy and he's like, I mean, they were good, but like the real quality is Intel, which he was very bullish on. I can find you the clip. Yeah, it's a real but you have to have, like, we'd have to go through and actually look at the earnings and everything of Jay Goldberg, Nvidia, Q3 after earnings. Was this it? Okay, yeah. Okay. This is what he said back in the day.
NVIDIA is out, everybody.
Fourth quarter revenue forecast did beat estimates. The company sees fourth quarter revenue $65 billion, plus or minus 2%. Third quarter data center revenue coming in above estimates at $51.2 billion. The estimate was for $49.34 billion. Third quarter.
You hearing these beats? These are disgusting beats.
adjusted EPS at $1.30. Third quarter revenue, $57.01 billion. Once again, the company sees fourth quarter revenue of $63.7 billion to $66.3 billion. The estimate was for $61.98 billion. Third quarter
63 to 66 billion. The guidance was 61 billion. Now Wall Street had to bring all of those estimates up to 65.5 billion. So they had Jay Goldberg on.
Bay Area. Jay, I ask you each and every quarter, and I'm going to ask you again, is this print enough to get you to change your rating on the company?
No. Short answer, no.
Okay.
Why would it? Why would it? Intel's where the music is playing.
Hey, why not?
I mean, it's an okay quarter. It was a good quarter, decent guide. At GTC DC 2 weeks ago, they put out that big revenue number, $500 billion over 5 quarters in revenue, which shocked everybody. I think what happened is they got more allocation from TSMC than they were expecting, so that's upside. That was more than I was expecting. But that's flowed into numbers now, right? And you start listing all the things that could go wrong with NVIDIA. That's a longer list than the things that could go right. So I still think they're challenged. I still think this is but I'll give them credit. This is a good quarter. I had actually raised my estimates last week because my checks were telling me they'd be doing pretty good. It's okay. I'll give them that. But one quarter, it's more than one quarter game here.
The street.
Yeah, we're fully aware that it's more than a 1 quarter game. Fully aware. Let's go ahead and have a look at NVIDIA's stock. It's more than a 1 quarter game here. You're so right, brother. It has been more than a 1 quarter game. Okay. Next quarter, they're now expecting Wall Street 65.5 billion. Yeah, I mean, it's okay. When was that last year? No, that was last quarter. He said that 2 months ago. For real, 2 months ago, he said that. And then in the background, you could see he's like building like a GPU competitor. He's building like his own NVL 72. And you should listen to the same dude talk so highly about Intel. So that's my competition. I'm doing my work. I'm looking at what all the CEOs, every buyer, all of this. And Jay Goldberg is also doing that, saying I'm wrong. Let's actually see what Jay Goldberg. He has Nebius as a hold. He has Intel. He just upgraded and reiterated his buy position 2 days ago. Sorry, January 20th, but 2 days before earnings. Upgraded buy position. His success rate on Intel, by the way, 0%. Success rate on NVIDIA, 0%. 25% success rating, average return in this insane bull market, which, by the way, he's covering, like, for real, the best industry in the entire world. He's covering semis and huge tech names like Apple and ARM and Texas Instruments, Qualcomm and CoreWeave and NVIDIA, Broadcom. Like, this is, like, the people that cover this industry are the #1 guys on Wall Street. And he somehow found himself in a negative return. I hate to clown this guy. I'm sure he's great at, like, he's probably having Like he has good family, people around him like him, but boy, you suck at your job. The shake my head, Tanner. How can you call yourself future investing if you clearly are only thinking 1 quarter ahead? Yeah. All right. He's a good guy. No, I mean, I'm sure he is. But he puts out these bad articles, and then it affects the stock, and then the stock ends up going down on those reports. So it affects my money. 1 quarter ahead is still the future. Well, I would say I think more than just a quarter ahead. I mean, I don't know how many times I've talked about NVIDIA being a $10 trillion business, and I've said that since 2022. So can we talk about Microsoft too? What a pump. So yeah, I mean the pump is insane. I need to get into this name. What an incredible run. I essentially just don't know if I should go in before or after earnings. That's the only thing. I'm going to consult with the great and powerful Stephen Fiorillo. Okay. I'm still blown away how undervalued Nebius is. I think people are just worried that, like, how guaranteed is pricing? You know, if there's so many competitors and there's just such a ramp there, eventually we will hit capacity. And then whenever we do, you know, how much of a premium can they charge for access to GPU, like renting GPUs? Any news or opinions about Accelera? Absolutely. Well, I'm not saying there's not news, but I don't carry any opinions about Accelera. I think it's a Canadian company, right? I wanted Microsoft under 430. It's not going to happen. Oh boy, you were close. Dang. I live my life 1 quarter earnings at a time. What happened to the community port? There was actually just we showed that off just yesterday, and then people, yeah, literally just yesterday. But I found that a lot of people were getting confused about it. We'll probably run it for the year and then just sort of cancel it, I guess, just because I think people are getting confused that it's not my portfolio and it's still in negative returns. But yeah. Okay, let's take a look back at Microsoft. It's an okay quarter, I guess. I cannot wait for his commentary this quarter. I can't wait. Also, you know what's going to be another great day? SoFi getting into the S&P. When is the next rebalance? When does the S&P rebalance next? March? Big Bear AI should be something I do DD on. I heard someone compare them to Palantir. Palantir doesn't have competitors. For real, they don't. You see it just in their valuation. Did you ever take some of your NVIDIA and convert it into AMD? No. No. Do you buy partial shares? Yes. On the community port, yes. What's your basis on new? I'd have to check. I constantly bought on the way up. So, like, there's a difference between my initial investment and how much I've made there versus what my, price is now. Let's have a look. My average cost on Nubank is $6, $6.01. It's actually lower than I thought it was. Amazon just cannot break 240. They'll be fine. They broke 240 today. They did it. Okay, let's go ahead and have a listen more to some commentary. Insurance companies will face massive disruption from AI adoption. What do you guys think about this new Lemonade thing? From my understanding, the Lemonade changes with Tesla. Do you guys think that that's just going to be done across every single auto manufacturer, every single insurance company? Because I don't actually know what is like proprietary about that, other than just being a first mover. But I do think that is interesting. That like, will people feel more open to paying for FSD if a good portion of that cost to pay for $100 a month is potentially just cutting your insurance costs in half, and then you're also buying back your time. Like right now, I still think you have to pay attention to the road, but like if that one day can also allow you to go on your laptop, then like, hey, that's easy work. Okay. Tanner, what do you think are some sleep well at night stock picks? Every single one of my companies that I hold are sleep well at night stocks. Other than maybe BM&R. BM&R is a little different pick that I've had recently, but I'm not adding to it. I'm just going to let that one run until something fundamentally changes with Ethereum or with BM&R. I'm just going to let that run. Yeah. Let's go ahead and have a listen about AI potentially disrupting the insurance industry. Here we go.
I cover insurance, Byron, and the big CEOs have told me they are predicting a lot of consolidation in the industry because they think that scale matters here, that you have to be able to invest big in the new technology in order to get the kinds of efficiencies that really matter to the bottom line. I mean, and we just saw this with Travelers announcing a big tie-up with Anthropic. When you're talking about software in general, how much does scale matter? And do you think that will drive M&A in the next year or so?
So we love these massive markets like insurance, healthcare, accounting, legal. They're about to get blown up. And so insurance is a legacy business. Those who aren't adopting AI in their underwriting capabilities and pulling in as much data in their outreach, in their business building, whether it's the broker side or the insurance side, we think there's going to be massive disruption there, and there will be a reallocation of that economic rent. It is one of those perfect use cases for AI. These are incredibly data intensive, decisions. And on the margins, it's almost like an algorithmic trader in terms of what you can do when you apply massive data sets, AI engines to rapid provisioning in the insurance world. And we think there will be a huge reallocation of value, and many of the incumbents there will be completely disrupted by new challengers.
And lots of different steps that we're seeing it come into play in insurance in particular. Yeah.
All the stages, absolutely.
Finally, Byron, we mentioned this Capital One Brex deal. To what degree is M&A going to play here in restoring some valuations?
It's an essential part of the legacy vendor play right now because they can't innovate fast enough. And so I do think that's going to be the second leg of this stool this year, which will be a powerful M&A undercurrent. A lot of these companies are sitting on big piles of cash. They don't love their multiple, but they don't have an alternative. Their internal innovation isn't going to be fast enough, and they need to innovate or die, which often means that they need to buy because the build and the partner is insufficient. And these will be company making decisions. And those who don't innovate are going to be lapped by this generational transition of technology. This is the cloud wave all over again, but 10x bigger and probably 3x faster. And those who don't respond are going to die because this disruption is just completely rolling through the industry.
Yeah, we have seen some early examples, and we'll see. We'll get some earnings next week. We'll see if organic growth gets a little less attention and M&A a little bit more. Byron, thanks as always. Good to see you.
Yeah, I don't know which of the insurance companies is going to be slow to adopting new underwriting principles if they see that their competitors are doing well with it. I think that would be a pretty easy adoption rate. This guy makes me think we're in a bubble. Yeah. Yeah, exactly. I mean, like, which ones are not doing this for auto insurance, life insurance, home insurance, any of the easy ones? Dude, what a bot. How are you? My headphones are not working, so can you reply to me in chat? Nope. There's over 1,000 people watching. I'm not going to reply to you, Amy. Okay. Please consider SiriusXM in the insurance conversation. It's not just radio. They have... Yeah, I'm not worried about that. Okay. Ladies and gentlemen, during the weekends, I would like to give you guys some homework. Take yourself out of your normal comfort zone and try to get your heart rate up. Okay? Find your way to... If I'm not talking to the active like athletes in the chat. If you're doing this, just do your regular thing. But focus on your health a little bit. Also, this is not health related at all, but I have gotten stuck. I'm back playing Minesweeper. I know that's the dumbest thing. Amy, leave me alone. Amy, no. No. You're a bot. Okay. I know I'm such a nerd. But I cannot. I love Minesweeper. I'm not spending a lot of time on it, but I like a little brain game. I like chess. Big fan of chess. Big fan of Minesweeper. Tanner is the cutest form of TISM. What? It's not TISM. It's just a great game. I walk 10 miles every day. All right. I like that. Tetris. I'm not a big Tetris guy, but I should get into it. Yeah. Man, if I could create a new YouTube channel, it'd be a Minesweeping YouTube channel. 1 game a day. All right, guys. If we win, if we don't win, then whatever. If I win, I'll donate like $100 for every time that we win. First try, nothing like this, or like no resets, no nothing. Yeah, full on Minesweeper stream. My fitness goals. I don't know if I have. I really want to get my resting heart rate below 50. I want to get to like a 49 resting heart rate. It's always been my goal. But I don't run as much as I used to. I'm going to try to get back into it. There's sort of like an extreme winter coming through Canada right now, so the temperatures are a little unbearable. The sauna does count as cardio, so stop lying. It will get your heart rate up. It's definitely good for your heart. 43 average heart rate. That's pretty nuts. Gotta love it. Fitness goals: increase your glutes and hams, quads, live longer. For real, I did my quarterly leg day. I got another one in April and then September. But for the most part, yeah, I don't do enough legs. That's for sure. Once I get my quarterly, my Q1 legs are done. Q2 legs, I gotta, we're still in recovery. Legs freaking suck. Every day is leg day? Yeah, right. No, not a chance. Take the elevator up to the second floor in my house. Love legs. Yeah, but I mean, chest every day. Chest every day. Yeah. William's one of the lads in chat. There we go. He gets it. Workout routine looks like this: chest, back, shoulders, arms, rest day. Legs, I mean, I don't have a grinder account. Abs, that's a little bit weird too. That's a little bit. So back to chest, then back to back, then shoulders, then arms again. I'm kidding. You got to do all of them. And specifically your legs. Your legs are what's going to generate a lot of the testosterone that's actually going to, help with the gains and a lot of the rest of your body. So you got to move the big muscles. But whenever I see people, they're like, oh, no, I like leg day. I'm like, okay. Like, no. You can come hang out with the guys. No, it's fine. It's just I'm not. But just be careful. This guy does a lot of legs. Okay. You can only like legs. Yeah, if you really do leg day, that it sucks. Amit does a lot of legs. I've seen Amit a lot in real life. The dude's got power hips. I don't know what. He's got the legs for sure. Show your legs. Never in my life will I show you my leg. Even in real life, the legs will just be blurred out. It'll look like a Japanese, film. It's not. The legs will never be in frame. I do have skinny legs. It does suck. I've tried, but honestly, it was mainly from a lack of young age activity. I really got interested in. I really got interested in exercise and fitness and everything probably in 2017, something like that. Like after my mom passed and I realized I had to take care of my health. And then I got, in good shape. Or at least right now, I'm honestly not even in the best shape of my life. I was in better shape before. But, I just, it's hard to, grow your legs into anything that's, yeah, Japanese film. I don't know if I could say those words. This is a family-friendly show. Try to deadlift. Get Jack for BJJ. I do. I like BJ. Oh, I'm not doing BJJ right now, but we have to have a section in the Discord for memes. I had found this video yesterday of this bouncer. Maybe someone has seen this video, but there's like a bouncer online and he's like pushing this guy out of the restaurant. And he's like, okay, you have to go. You have to go. And then the guy's like, hey, get your hands off me before I rough you up. And the guy's like, oh, you do jujitsu? I don't know. Has anyone seen this? And then the bouncer pulls out his phone. He's got it's a picture of him in a black belt. Oh man, it is so fun. I was like, for real, rolling in my bed, like stomach hurting. Especially, it's just the way that he says jujitsu. Like, you ever see these guys that they say jujitsu? Like, you just do not mess with that dude. Like, that is Brazilian. Like, it's in the roots. Okay, do not roll with that guy. You'll be involuntarily made a pretzel. Yeah, the bald bounce. Yeah. That's him. Yeah. He will fold your clothes with you still in them. Okay. It is too good. Is this future investing channel hacked? No. This is me signing off because I only go till 2:30. So I'm just having some fun. But ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. Yeah, he really did want to fight. Okay. Thank you all so much for watching. Really do appreciate your time. I've got a video coming out today. So look out for that. Bye for now.